A warm welcome, ladies and gentlemen, on Business Today Television. We begin with our coverage of first quarter earnings for the fiscal year to March 2026 and begin this episode with welcoming Mr. Feroze Azeez, Joint CEO for Anand Rathi Wealth. Remember, the stock has been a multi-bagger and the earnings again without doubt are fantastic. Let me just share the basic numbers with you. You have a very sharp increase in both profitability as well as top line. The numbers are right there in front of you on the screen. Revenue from operations is up 17% to 322 crore rupees year on year. The profit margin has improved dramatically to 34.4% on a net basis, and the profit after tax is 24% higher at 116 crore rupees versus 94 crore rupees in the year ago quarter. And the most exciting thing is that, ladies and gentlemen, Anand Rathi Wealth's AUM under management now exceeds 1 lakh crore rupees. Welcoming Mr. Azeez. Namaste Feroze ji, a very warm welcome. What a wonderful set of numbers. Congratulations. 1 lakh crores is what you now manage. What are the subsequent quarters looking from now on? The one that's gone by has been fantastic.
Namaskar, Shail sir. Yes, God has been kind over the last quarter, but Trump hasn't been as kind as he could have been. Of course, markets have had their own uncertainties and utar chadav, as we call it in the Hindi lingo. But I think AUM has gone up to 1,06,300 crores. The way Anand Rathi measures AUM is very different because there's no accounting standard to measure AUM. See, revenue and profits are credits to bank accounts. AUM, everybody has their own mechanism. So quite a few wealth management outfits count a lot of assets which they don't earn on at all or earn abysmally small. And they say that I'm managing X amount of money. At Anand Rathi, we're very positive about how we manage as against how much we manage. And we only try and garner that money which is intergenerational. So that's point 2. Point 3, so the denominator which we use to measure our AUMs is very global standardish, is the point I would make. And then now we have given a guidance of 1,20,000 crores for the year end of FY27. I think if God's kind, that should happen. Just that AUMs are on the last day of a specific financial year. And it would be interesting to note, in this full calendar year, 30th March, which was the last day of the last financial year, was the worst Nifty level, 22,313. So we recorded 93,000. And last year, we didn't meet our AUM guidance. I'm just highlighting again. We were planning to be at 1 lakh crore in March. So we have made up for that, and we are now at 1,06,300.
Okay, wonderful. So that benchmark has now been scaled. Tell us how much of this AUM is because of rise in market over last year, and how much of it is fresh addition of funds?
Shail sir, our fresh addition of funds were 2,700 crores. We had an internal target of 3,000 crores. We did 2,700 crores, out of which the good part is 1,900 crores came into equity mutual funds. In a quarter which went by, which was very uncertain, clients generally delay all their investments because it's emotionally very difficult to cut a check when you're reading a lot of news, especially with the social media throwing a lot of information at one phone. So coming back, 2,700 crores was the number which came out of net flows. The second reason why you get a better AUM is if your mutual fund selection or your products do very well and better than the market. So Nifty for this full quarter on an average basis was about 5.5–6% greater than what it was the previous quarter. And mutual fund selection, for example, outperformed Nifty by about 5–6% just in a quarter. Of course, it's an aberration. So all the three cylinders fired well for the last quarter. Nifty did about 6–7. Excess return of, for example, mutual funds was reasonably good. And 2,700 crores of net flow brought us from 93,000 March 30th to 1,06,300 on 30th of June.
Okay. So let's just get the basic numbers right, then we'll come back to the market. I need to understand this rise in the rise versus the Nifty in your AUM, how did it come about? We'll come to that a little later. Let's get the basic numbers right. So, sales, profit, and profitability, all three of them are higher. Has distribution reach in terms of physical cities and higher number of RMs also increased in the quarter gone by?
Yes, there has been. I look at it year on year. We don't look at this business quarter on quarter. Of course, as a listed company, people publish it quarter on quarter, but we look at it year on year. That's our business we generally run. There are 30 relationship manager increase over the last 1 year, little over 30. And if that's the RM increase, we also, as a wealth management outfit, have a very different strategy. We earlier used to hire people from outside, from other wealth management or banks. And then we realized that the cultural fabric and the client centricity needs to be imbibed much before a person turns 35, 40. And that's why we started hiring 7, 8 years back. We started hiring people from colleges. So as we speak, we have more than 490 account managers who are apprentice working with 417 odd relationship managers. So these apprentices become my relationship managers. So 75% or even 80% of our last 100 RMs have come from internal promotions. अगर बचपन से किसी को लो, professional बचपन, and then redesign their mind of doing, you have to be client centric. That's when we'll be able to carry the brand promise for decades as against years.
So it essentially means that I can't apply for Anand Rathi Wealth unless I get back to college.
I'm glad that I got in when I was 30. 31. Yes, you're right. We both are not qualified to join Anand Rathi currently.
Okay, perfect. Now, so it's both a volume increase as well as value increase, geographic increase as well as number of RMs. So that basically explains the 18 and 21% rise in profit and sales. Now, let's look at the construct of the AUM and come back to the previous point where you mentioned that your choice of funds outperformed the Nifty's value by 5 to 6 percentage points or 500 to 600 BPS. That's what I understood.
Absolutely right, Sir. There are 14 schemes in my model portfolio. I retrack the same 14 schemes for all our clients. And yeah, as of almost 30th, I think the outperformance would be about 7%. Yeah.
Okay, perfect. Now, again, let's get back within these 14 schemes. For the quarter gone by, although that's a very small number, let's look at the year-on-year comparison. Within these 14 schemes, what outperformed the Nifty?
See, Shelsa, this last quarter was an exception. From 1st November, when we released the new model portfolio with amendments, that was 1st November till 30th of March. There was 1% underperformance also, right? So per year, we look at 4% outperformance on Nifty. It does not come, unfortunately, linearly. So I'm just highlighting the previous 5 months were bad. This 3 months were good. There are 14 schemes, incidentally, and it rarely happens that all schemes have outperformed Nifty for this quarter.
Okay. How is it, Feroze, that this number, which is 14, has been constant for quite a while? There has been no new addition. Is it that fund managers are unable to please your research team, or you refuse to go beyond 14?
So we don't move beyond 14 generally. First, we used to have 10 as the maximum limit. When we did a study of people who have actually done better than our model portfolio, because quite a few clients might have done, or especially if somebody was investing somewhere else, if we have done better than us, we try and use that as research material, and we realize that you can have more number of schemes and there's no problem. That's when we moved to 14. So the 14 went through about 3 to 4 changes on 1st of November. The total number didn't change, but there were about 3 to 4 changes on 1st of November in the previous 14, and the new 14 have only 10 or 11 of them intersect.
Okay, understand. So there have been 3 or 4 new entrants and 3 or 4 laggards or relative underperformers have moved out.
Yes, Shelsa, but what we do is we don't exit or enter a scheme on the basis of past performance. For example, if that was to be done, SBI Infra was my worst model portfolio scheme on 1st of November. Now it's one of my 4th best now. My best one was HDFC Flexi Cap, but after my review period, HDFC Flexi Cap is my 2nd worst. Funds are cyclical.
Yes.
So I'm just highlighting for the benefit of the viewers, because most of us, as per our heart, we like to buy the better ones. Of course, Shahil sir, not for you. Of course,
Ha.
you are a master.
No, no.
More for the audience.
I understand the complexity and, times when funds go to sleep. What can you do? That's the nature of I won't say animal or beast, but that's the nature of the business where, it just decides to take a pause and it's okay. We know over longer periods of time, if nothing works for 1 or 2 years, then 6 months will see a 50-70% return. So your business is for the patient investor. आराम से नींद आनी चाहिए. Now, what are the 3 or 4 additions that have come in this universe of 14?
Yes, that came on 1st of November. I now don't remember which one came on. I'll tell you. Bandhan Large and Mid Cap definitely entered on 1st
Okay.
of November. Invesco India Focused Fund also came on 1st of November. During the every 15 months we do a review and release the model portfolio. These two I'm sure entered lately. The rest of them I don't know which one was from the past, because it's already been about 8 months since the last review.
Fair point. Now, I want to understand, these 14 are pure equity plays. For instance, there is no hybrid aggressive, or there is no bond portfolio as such?
Shall no, because we have managed HNI. The asset allocation we do at our end. If I was in the business of retail, I would definitely take these hybrid schemes, because unke paas hoga 5,000, I can't give full personalized services. So I'll just buy one scheme and be done with it. Since our HNI is our segment, which is by definition about 9 to 10 crores of total assets, out of which they may give us 2-3 crores to begin with, we think asset allocation should be a wealth manager's decision rather than a fund manager's.
Okay, fair point. Coming back to the HNI families, I was just seeing the press release. Has there been an increase in number of clients as well?
Shelsa, you got the last 3-4 seconds got smudged.
Okay. I'm just asking, is there an increase in the number of clients as well, Q on Q as well as year on year?
Yes, Shelsa, we've added about, we've come to now 13,900 odd clients, families. We were at 12,800 thereabouts last year, same time.
Okay, fair point. Now, coming back to this sectoral churn that is happening in the markets, Feroze, because you look ahead and you also look at earnings potential of all maybe top 20, top 30 stocks in every fund, what is Q1 telling you in the sense that what is the trajectory of these funds?
What is now? First, you spoke about earnings, Shelsa. Like you said, earnings are very critical, right? Earnings can be ignored for a certain part of time. Price will have to someday converge to earnings. So if you look at earnings, Nifty's earnings in rupee terms, which people generally don't track, was 1,195, 1,190 for last year as per Bloomberg. 1,186 was our estimate. And if you look at the previous year, it was 1,070. The previous to previous year was 980. And it'll be very interesting for a viewer to note, when there is so much pessimism, you should also look at what was the earning of FY 10 years back. It was 330 rupees. So 3 lakh crore की प्रॉफिट आती थी निफ्टी 50 कंपनियों की. इस साल 9.5 लाख करोड़ की करीबन प्रॉफिट आई है इन रुपीस उस 50 कंपनियों की जो निफ्टी के आज शामिल है. और लास्ट 10 ईयर की निफ्टी की अर्निंग्स ग्रोथ 12.9% रही है और प्राइस ग्रोथ 9.3% रही है. जब भी ऐसा होता है, whenever you see Nifty price has underperformed Nifty earnings by 3%, those are times where you accumulate your equity, where your heart will reject it. But you look at this data and it's clear that Nifty price has underperformed earnings for the last 10 years by 3.5%. So what do I see of just this quarter earnings? Of course, I again see that all the 4 major indices, Nifty 50, Nifty 100, 150 small mid cap and 250 small cap. These I call crucial because these are subsets of NSE 500. As per Amphi, these are the most crucial ones. All these have the potential for this financial year to grow their earnings by about 9 to 12% for the full financial year.
So essentially, let me just put it very simply. the CAGR of Nifty as an index is 9.9% in the last 10 years. And the CAGR of its earnings is 12.9.
Yeah, 9.3 and 12.9, precisely.
Okay.
Yes.
And essentially, in the most commonsensical of
1, 2, 3,
world,
4.
it should be
Check,
1 is
1,
to
2,
1.
3, 4.
Right? Okay. So what we'll do, ladies and gentlemen, this is what basically Feroze is trying to explain, that if your earnings growth is at 10% and your stock has not compounded by 10% but by 7.5%, then the stock will have to catch up in the world of markets. And that is what is happening in Nifty. When so Feroze, we were discussing this 350 basis points gap between earnings growth and of Nifty as also its CAGR compounding. So in the world of common sense, these should be 1 is to 1.
Correct. Or at least on a 10-year period, they should converge.
Yes.
So these are good indicators. Of course, they may not converge precisely, but the whole point is whenever this kind of disparity happens, it's time to build your equity portfolio to the reasonable proportions which justify your long-term money. 5 साल से ऊपर का पैसा अगर इस समय में equity में नहीं है, माना कि डालने के बाद 5-10% गिर सकती है, मैंने उधार लेके 22,600 में लिया, काफी करोड़ों में मान लिया इन equity, बट उसके बाद अगर 21,000 दिखती तो भी मुझे इतना डर नहीं होता क्योंकि वापस आ जाएगी ऊपर. So not accumulating and creating a long-term wealth is not possible if you don't exhibit courage today for long-term money. ऐसा नहीं कि 2 साल का पैसा आपने डाला. So that's why I'm trying to show this data to make the clients act. And that's when they were able to, our own clients were able to act because they look at it rationally by seeing this data and they're prepared for 5, 7, 10%, 15% downsides.
उस डाउनसाइड में हम बेच थोड़ी ना रहे हैं फंड, हमारा तो सिप चल रहा है. So we are also buying further potential gains at lower prices. Fair point. Now, when you explain this very well for the Nifty, what is it for the small cap 250 and what is it for mid cap select or the mid cap index that you mentioned?
Sir, I don't have the precise numbers because why don't I do that precise number is because they're very fluid indices. Last year to last year, 67 stocks बदल गए थे 250 में से. लोगों को एहसास नहीं होता कि इतने निफ्टी में 4 स्टॉक बदल गए थे. So that is the difference in terms of the fluidity. Here, more 7-8% of the stocks change every year. There, almost 2/3 or 1/3 of the stocks change, 2/3 remain constant. So, looking at a more static index like Nifty, so I've not done the study to be correct.
In 10 years, Feroze, take it from me, the small cap 250 10 years ago is not the small cap 250 today. In fact, many of them would have been moved to mid caps and large caps. I'm just saying that that's the nature of the beast. And that's how indices compound, because the job of the guy who makes the index is to get in growth engines. And when the growth engine becomes a spaceship, then he ships that engine from small cap to mid cap and from mid cap to large cap. That's how indices are made and that's how compounding generally happens. My final set of questions, Feroze, given the fact that we met in March and you made a very nice statement at that point of time that March was the month in which Anand Rathi Wealth convinced its customers to buy the maximum number of funds. I think that number was 800 crore rupees.
Correct.
How has that performed between March and July, although it's too short a period? Nevertheless, you bought nearly the bottom.
Yes, Shelsa, let's assume March, like we would have met on another market interview, I would have told you this number of equity net sales, which is also a published number, fortunately. So from 1st April, our model portfolio, most of our clients follow the model portfolio to the T. 1st April till now, Nifty has delivered 6.94 till 8th of July from market standpoint, and the model portfolio has done 7.99% extra. If I read out, the best scheme has been for this financial year in Invesco India Small Cap with a return of 25.58. Invesco Focused is the second best, 23.38, and so on and so forth. Quant is the third best, and so on and so forth. The worst one for the financial year, of course, a short span of time from our model portfolios, ICICI Dividend Yield with 8.56 as against Nifty of 6.94. So even the worst one this quarter has outperformed, or till 8th of July has outperformed Nifty by about 1.62%.
Perfect. 162 basis points, right?
Yes.
I just want to clarify 1.62% and 1.62 percentage points are two different things.
Well, 1.62% or 162 basis points.
Basis points. Huh. So, the model portfolio of Anand Rathi Wealth has outperformed the Nifty by how many basis points? 700 basis points.
799 basis points or 7.99 percentage.
So, if the Nifty rose 7%, then the portfolio advised by Anand Rathi Wealth rose by 14 or 15%. That's how it needs to be explained. My apologies, as far as maths is concerned, it's a bit of a thing to mention the right percentage or right percent. Anyway, be that as it may, Feroze ji, what ahead? How do you see the market from now on?
So see, whenever a question comes to our mind, we lean on data. Generally in Anand Rathi, that's what they've said. Clean and transparent data without color, like pani. Pani mein it has to be orderless, colorless. Data can be orderful and colorful also. So you have to not massage the data. So now let me give you a plain data without an interpretation. We checked that Nifty has done 2 years of negative return on 9th June 2026. Okay, election ke result ke pehle, before the third term of Modi ji, Nifty was greater than what it was on 9th June of this year. So we looked at the last 26 years and saw any time if 2 years was negative, that has happened on a rolling basis 50 times out of 291 times. 291 observations of 2 years rolling with a monthly shift. Out of which 50 times Nifty has delivered a negative return on a 2-year basis. We took these instances and saw market का क्या हशर था 3 साल के बाद. इस समय में किसी ने जिगर दिखाया होता और इन्वेस्ट किया होता तो 3 साल की मिनिमम रिटर्न थी 4.1, maximum compounded of course, and maximum return the 56 compounded again, and mean return was 21.6 and median return was 20.2, which implies any time when you see 2 years of negative return on Nifty, the average a person would have made if he bought on those 50 instances would be 20.2 as a median and 21.6. So now coming to what do I see in our company, like if I was running a steel plant, iron ore would have been my raw material. If I'm running a wealth management outfit, Nifty is my raw material. निफ्टी की मीडियन प्लस रिटर्न आने की संभावना मैं बोलूंगा 95% है अगले 3 साल के. मीडियन इज 11 से ज्यादा आने की संभावना 95% है. ये हमारा जजमेंट है. अगर वो रॉ मटेरियल ऊपर वाला बेचता है तो हम 14-15% की फिनिश प्रोडक्ट हमारे क्लाइंट को देने की क्षमता रखते हैं आज और कोशिश करते हैं कि वो रहे.
और जिस फंड में आप इन्वेस्ट करेंगे वो निफ्टी को आउट परफॉर्म करेंगे तो उनका रिटर्न और ज्यादा होगा.
कोशिश रहेगी सर.
On that very optimistic note and how should I say a mathematical look into the future of markets, Feroze ji, we'll call it time. As always, what a pleasure, and we wish you all the best for 1,20,000 crores as AUM as soon as it can be. Have a nice day, sir.
Grateful, sir.